Going into our discussion, we're looking at the first topic for today. We look at the Senate approving 1.77 trillion naira loan for the federal government. That request was sent, like I said earlier, 2 days ago on Wednesday, and of course it was approved yesterday by the federal government. Of course, we also look at the FAC allocation. The federal government and states and local government did share 1.411 trillion naira in the month of October. My guest, Steve Nwachukwu, joins me via Zoom to discuss this. Good morning, Mr. Steve.
Good morning. Thanks for having me.
Good to have you. Let me quickly get your thought with regards to Nigeria debt burden, a new borrowing of $2.2 billion.
Of course, yes, of course. It's one of those crisis zones we continue to, drag ourselves to. Unfortunately, it's part of the borrowing plan of the federal government to raise trillions of naira to support the 2024 Budget Appropriation Act. But what should be of concern to most of us, beyond the fact that we have, treaded in this very delicate territory of debt ratio to GDP and even revenue to debt service of more than 85% and 52% of debt to GDP, which is quite alarming. But the great concern of this very $2.2 billion should be the assumptions of the federal government on the benchmark exchange rate of 800 naira. That was a false claim or false figure of 1.77 trillion. What you have there approved by Senate is a false figure, and Nigerians should raise the alarm like I am. Now, it is not nowhere in our current economic realities or based on numbers available that suggests that the $2.2 billion will translate to 1.77 trillion naira. Let me state it again. In our records as we speak, based on data available, based on all the parameters set out by Central Bank of Nigeria as we speak, based on the federal government policy flotation, there is no assumption or basis to assume that the $2.2 billion will equal to 1.77 trillion naira. I hope you can hear me.
I can hear you. Go ahead.
Okay, so that's the challenge, and we should raise the alarm. And that bill or that appropriation or that very request by the presidency should be revisited by the National Assembly. Like I raised the alarm to some of the senators, I did send them an invoice to alert them that this is a wrong parameter or wrong assumption. As we speak, an exchange rate is going above 1,600 naira. Is CBN telling us, or federal government telling us, after raising this $2.2 billion, they will come to our own local market and sell at 800 naira to receive naira to fund their project? This is the question they need to answer. Absolutely. If they said, yes, we are going to give back this money, the $2.2 billion we are going to raise through issuance of Euro bonds and the rest at 800 naira, they should also tell us who are those they are going to sell at 800, because an average manufacturer, average businessman, average individual seeking for dollar is buying from the CBN and other official channels above 1,600.
Naira,
that should be our concern as we speak now. Yes, we know that the debt profile is quite high, over 135 trillion. But why are we borrowing and we are also cheating ourselves? What it simply means that those within the corridor of power is about to pocket about 1.3 trillion naira. Let me repeat it again. If they succeed in using 800 naira as the benchmark, someone somewhere is going to take advantage of millions of Nigerians to pocket about 1.3 trillion naira. That's simply what it means. The current selling prevailing price of exchange is above 1,600. Who are you going to sell this dollar when you receive it from the proceeds of your Eurobond issuance at 800? Who will be those that will be qualified to receive this money at 800? Government needs to speak to these very issues. Like I said, the assumption is wrong and it's false. Thank you.
Indeed, a very concerned point you raised there, Mr. Steve. Let's also look at what this will do to our current debt profile. Our debt profile as at now is 134.3 trillion naira. If you quantify that in dollar terms, it's $91.3 billion. Looking at the current exchange rate, even though in a way it is fluctuating there. What would this mean to our debt profile? Of course, don't forget, in the 2025 appropriation bill that is being proposed so far, we are expected to borrow at least 13.8 trillion naira as well as part of the deficit to fund the budget.
Of course, that's the alarming point I keep re-emphasizing, that government should be watchful, government should be mindful, government should pause and look for other sources and other ways to raise revenue to fund their fiscal projects or desires. It's unfortunate that we continue to hit the debt market to raise funds, to fund those desires, aspirations, and wishes of those within the corridor of power to execute one or two projects. Like I said, it's alarming. It's also unfortunate that we are hitting the debt market at very slighted policy decision of the government. Like you read at, the current debt profile is above $92 billion. If you bring it down to dollar, it's currently above 135 trillion naira. 135 trillion, when you add this very $2.2 billion, that's about more than 35 billion dollars, and which is more than 39 billion, more than 138 or 39 trillion naira. What it simply means in percentage terms is that our debt to GDP, which is currently sitting at a threshold of 52%, will rise about more than 1.5% to maybe 63 to 64, 53 to 54%, which is also alarming. Have in mind that we have a debt ceiling, a debt threshold around 45%, and the West African and African threshold is around 40%. We have surpassed the African benchmark, we have surpassed the Nigerian benchmark, and we continue to hit the debt market. Like I said, if you add this borrowing, it simply means that we'll move from 52% to somewhere above 53 to 54%. Then bring down the revenue, which is the main aspect also that affects us so much. The revenue to debt service. Last data from the Central Bank of Nigeria suggests that it actually, nosedive from somewhere around 95 to 97% to currently around 85 or 86%. If you add this, and with all that growing concerns around our debts, possibly is hitting back to 90%. That's an alarming state. When we saw the number from CBN a couple of weeks or months ago, that our revenue to debt service is actually moderating, we are all happy. Now hit the debt market again, raising our revenue to debt service to a very alarming stage of 90 or 88% once again. So government should be mindful of this very posture of borrowing, and concerns should be placed on the utilization of our valuable minimal resources and use it appropriately to fund those physical desires of government, not hitting the debt market. Like I keep emphasizing, government should look other alternate ways to raise funds. We have moribund assets out there that government can utilize. There is nothing stopping government commercializing. Yes, NNPC is commercialized, perhaps privatizing NNPC, holding some certain percentage, maybe 70-30 or 50-50 or 49-51, and raise trillions of naira to also fund those desires that are found there in those budget line items. We should move away from interest-bearing loans to asset-linked loans that can also have some components of conceptual loans or some components of PPAs. Let's get involve the private sector in development of our critical sectors. Let's not depend on the funds that we raise to actually fund the government.
If you can hear me, that's
Yes,
a very good submission there. But let's quickly touch on the FAC allocation that was shared by the federal, state, and local government on Tuesday. Of course, about we have that in graphics terms. About 1.411 trillion naira was shared between federal, state, and local government. If you see in terms of percentage revenue distribution, see 433.021 billion went to the federal government. State government got 490.696 billion naira. Of course, local government 355.621 billion naira. What's your take on this sharing formula? The state government is still taking the largest share, and the federal government is still taking the largest share.
Of course, that's the existing instant law. The formula still favors the government. That's why some federating states are calling for devolution of power, so that the state will have more duties. When they have more functions, they will have more funds to actually apply to their respective states. Yes, the current formula still suggests that federal government will still have the chunk of these very funds being reserved for the development of the nation, while the states are clamoring for perhaps an equitable formula that will perhaps devolve more power, more resources, and more funds to the federating states. But as we speak now, the formula is think towards, centralizing power and resources to the federal government, and that clamor needs to be intensified, and we need to do all it best to review the sections of our laws that perhaps will suggest, or perhaps that will empower the states more and with more resources to states. And with this very development of the request for the new tax law, perhaps it will also in one way or the other release more money to the federating states. But the formula itself from the Revenue and Fiscal Allocation Commission needs to needs to revisit that very formula, perhaps give more opportunities and more resources to the federating states. 1.4 trillion shared by the federating states. Yes, perhaps one would say is one of the highest of the numbers of the highest of the figures shared by the federating states. But if you quantify or perhaps subject it to the current realities of the value of naira, you will still find that what they shared a year ago, or 6 months ago, or 8 months ago is far better than what they are sharing now.
Absolutely.
But like I said earlier, governance needs to be improved in these federating states. They are receiving more trillions of naira. Governance should not be reduced to mere payment of salaries and allowances. Governance should be improved. Infrastructural development, the federating states and the governor should be improved with these resources they are receiving. But like we said earlier, receiving 1.4 trillion may not actually amount to receiving a better sizable and naira-packed trillions. Perhaps it's a figure money, it's a paper money. It does not have the weight it ought to have to execute projects. Thank you.
All right. Steve Nwachukwu, an economist and of course also a stockbroker. Most thank you for your contribution on Business Daily today. We appreciate your contributions.
Always my pleasure. Thanks for having me.
All right.